The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 19th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I hope you had a fantastic weekend out there. I know I did, and I absolutely treasure your presence here this morning. Thanks so much for tuning in. And, folks, my outcome, as always, is to help you to become a better money master and to provide you with the tools so that you could lead an inspired life. Because leading an inspired life, folks, that's what it's all about. It is Thanksgiving week, and we're going to have a shortened trading week. The markets will be closed, obviously, on Thursday and then open for half a day or part of the day on Friday. Should be light volume after today's short covering rally. That's what we'll see at first out here. Then we'll see if there is any kind of momentum, any kind of energy, any kind of volume, any kind of power behind the move that we are seeing out here. But let's go take a look at one of our tools. The entire week, folks, will be spent on making sure that you have an attitude of gratitude, because that is really what it's all about. And gratitude, just real quickly here, it's, in my opinion, gratitude touches the ultimate foundation of our human existence. Gratitude touches the ultimate foundation of our existence, you and me out there, for there is hardly another quality within each of us that is so suited to reveal the state of our absolute capacity. It is always about giving. Thanksgiving, folks. No one can be grateful to himself. For gratitude goes from one person to another, from us to you, from you to us. Thanks so much for tuning in. And folks, that's why I'm grateful for your presence here today, because gratitude goes from one person to another. It is just that simple. Live with an attitude of gratitude, folks. I promise that it will work for you. Let's go take a look at these markets out here. We've got the Dow futures up 100-plus points right now. The ES Mini up 13. NASDAQ, it's green across the board. NASDAQ futures up 27. Of course, Apple, all kinds of reversal signals. If you was fortunate enough to be able to do the first hour of Tom's show on Friday from 4 to 5, David White and I, a little tag team match, did it. The second half of that first hour out there, and there were just simply reversal signals all over the place. That's what really candlesticks are. They're nothing more than reversal signals. They say that the trend is your friend, and that's true. The trend is your friend until it changes, and you've got to be able to identify where those changes are going to impact each other. Candle signals will be the first leading indicator that you see out there. There's other patterns, A to B equals CD patterns. Those were completing. We had all kinds of lunar and celestial activity. We had Tuesday, Wednesday, Thursday, back to back to back out there. We had one of Steve's hammer candles show up in Apple. That's probably one of the more important candlesticks and more important charts that we've seen. We know the market was in oversold condition, so it has to bounce out there. That's what we're seeing really across the world. It was us, it was you, it was me here in the United States. We're the ones that handed it off over to Asia last night. Over in Asia, you had the Shanghai up, just a couple points. You had the Hang Seng up 100 points, about 0.5%. The Nikkei up another 1.5% up there, 129 points. Over in Germany, in Europe right now, in Germany, they're having a little bit of a party, almost up 2%, 132 points right now. You've got the FTSE having a strong day as well, up 1.5% out there. As we take a look at our futures market here, really only up 1% or less out there. King dollar pulling back. That means the euro. We'll take a look at the euro chart. That's moving higher. The yen now getting stronger against the U.S. dollar. That's after running into all kinds of Fibonacci expansion and contraction areas. You've got gold up $15. I do suspect we'll see gold move up into the $1,800 level one more time. It's at $1,730 right now before it gives it up and moves its way all the way back down to the bottom of the consolidation range. Perhaps the same with silver, not that it'll get to $1,800, but we should see silver with the weakening dollar. That's coming back into a line here. Longer term, though, I believe we will see lower prices in both gold and silver, as well as our markets out here. But right now, what we've got going is a nice little bounce out there, and we'll see what kind of momentum. We've got light sweet crude up $2 right now, so that's a little stinger coming into the holidays. You've got the light sweet crude trading up almost at $89 right now. 877-927-6648. If you're listening in on the radio, maybe it's your mobile device at tfnn.mobi. You can always catch an archive of this show. It is on Channel 9 out there. And as we take a look at the 30-minute chart on the ES Mini, getting into close to that extreme overbought territory. What does that mean? It means that it has to work it off, and as it works it off, it'll either move sideways for a while, perhaps retrace here, but it probably won't start that until shortly after the open out here. We've got quite a bit of time till then. You can see it's undergoing it's making an A to B equals CD on the 30-minute chart. 1376, really the next stop up there. If we're taking a look at just simply retracements of swing points on the 30-minute chart, I'm using the swing point out here. The last time that it was in overbought territory, which was back at about 11:30 in November the 13th out there, as the ES Mini was up at the 1386 level. Got into that overbought territory. What did it do? What it had to do, which was move lower, work that off, and it worked that off all the way down into a low that was put in here on Friday at 12 noon. That low on the ES Mini, 1340.75 out there. So if you just simply go from the top to the bottom, what you'll see is that the ES Mini really hasn't stopped. No bears in sign here after coming off of the bottom. 1372 is what it's trading at right now. 1376 is really the next stop, but what this wants to do, it wants to at least make a 100% move of a move. Even being in this little overbought condition, could easily do that before it starts to back off. If you are short, I would say be very careful out there, and if you are not long, what you ought to do is maybe wait for the first pullback out there on an intraday chart for whatever it is that you are looking at. Let's go take a look at the daily futures contract out here. We'll switch over to the ES Mini on a daily chart. Take a look at what's going on out here. On the daily chart, what you're seeing was the 1 to 1.272, A to B equals CD. That's what was completed. And then what do we have out here? Looks like a little bull sash or bullish engulfing candle. That was Friday's candle. You can see we're having nothing but follow through today. If we go take a look at these patterns out here, let's go ahead and get rid of a couple of lines, make it a little bit easier for you to be able to take a look at. We can see what the ES Mini also did was really made what we'll call an exact 0.618 retracement. If we go from the high on the ES Mini, actually what you do is you go from the low out here. The low that I'm talking about is the June 4th lows. If you come off of that low, all the way to the high that was put in on September 14th. And you use your retracement ruler, the 0.618 retracement of that entire move up, 1340.50 we're going to call it. And what the ES Mini got down to was 1340.25 on Friday. You got to love that. Gave you a reversal signal. Now you're getting follow through. That's what you needed to see out there. It's going to be one heck of a short covering rally. And again, we'll see what kind of momentum it is in there. But everything was really in place. You know, I spoke about it all during the week. We had nothing more than taking a look at how oversold the market had gotten. Hadn't been that oversold since the early part of June. We had all kinds of patterns that were completing. All it was really a matter of doing was waiting for the bullish signal, either on a longer-term chart or looking for an intraday entry out there. That's what my clients and I did. We looked for intraday entries, and we went long and strong these markets on Thursday and Friday last week. If we take a look at where it is that it's going to move up to, well, let's just simply take a look at a couple different areas. On the ES Mini, we're simply going to go ahead and we'll start from the high out there from September 14th, just like we did in reverse. Now we're going to go from that high all the way down to the low that was put in. We'll put this in black out there. It makes it a little bit more difficult to actually see. We'll put this in red, and we're going to go down to the low of Friday. What you'll see, that very first natural bounce is in the 1389 level. That's your dead cat bounce. That's your 0.382 level. But really, where the ES Mini wants to travel up to is all the way back up to the swing point from November the 7th. That'll take you up into 1431 out there. You can see just below that is the 0.618 retracement in about that 1419 level. That is the target. That's an initial target out there. You know, you can go back to the retracement, not the retracement, you can go back off to the trend line, quite frankly, off of June 4th. into the October 15th. Actually, I'd probably use a different trend line out here. Let's go ahead and get rid of this one. Let's come all the way back to October 4th, and let's draw that trend line in. So we're going to go from the October 4th low to the June 4th low out there, and that is really the trend line. Once you break a long-term trend, and going back to October 4th, that certainly is a long-term trend, that is going to be an area of resistance on the daily chart. I suspect the ES Mini will go ahead and get up inside that, give everybody a little bit of comfort in the holiday season, and then we'll see the big kibosh perhaps sometime next week. You got to play this one day at a time out there. But right now, one day at a time on the ES Mini, that is what it's doing. All kinds of reversal signals out there. Let's go take a look at the one that was really the key out here, and that was in Apple. Apple making a hammer. So if you have listened in on the show here, you know what happens with regard to a hammer candle when you close below it, right? If you're long, you're what? That's right. If you're long, you're wrong. So the trade setup becomes really easy. And from a momentum standpoint, I would say that might be, if you get a failure here over the next couple of days, and that's always possible. I don't think so, but it is always possible. What you'd be paying attention to is Apple. The low on Apple, 505.75. If you get a close below that, then if you are long Apple, I guarantee you are wrong. Or if you are long the NQ, you are wrong if you get a close below that. Apple, though, here in the pre-market, Apple leading the charge, of course, on the way up. Closed out at 527 and change. Trading out right now at 537, basically. So going to gap up $10 out here. Apple moving down into what Apple really did was let me refresh the screen out here. What Apple really did was it came back and it tested the last high volume bar that it had out here. That high volume bar was right here the day of February the 15th out there. 53 million shares. Now, as it came back in there, even though it came back in with volume on Friday, 45 million shares. So it came back, tested that bar. That's right here, February the 15th. Got a hammer candle. You're just simply, it's going to bounce higher. It's going to gap higher. That does have some meaning out there. It has a meaning across the board. Also to the upside, you got Biomedic Therapeutics. Lowe's out with numbers this morning. They closed at $31.98. They're trading at $33.80 right now. 877-927-6648. It is Thanksgiving week, and I am thankful that you're here with us. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at taking a look at the currency world. We're taking a look at the euro-US dollar. Now, this is really a key chart to be paying attention to today. Why? Because the euro has been traveling in this downtrend channel, this little downtrend channel that we're taking a look at starting from October the 18th out there. That's your first touch point, which is the open. That happened to be 1.31173 out there. You can see how price here has been traveling. Friday's action got us up to the top of that channel. What the euro is trying to do is to break out of this. If it breaks out of it, the euro gets stronger, the dollar gets weaker. That will be the fuel. That will be the energy that the market needs to move higher. You can see, so it's bumping up right now. It's bumping up against an area of resistance out there, and that is one that I would be paying attention to out here. We know that the markets on the short term have gotten into a little bit of an overbought condition, so it makes sense, energy-wise, to try to work that off. Even on the euro on the daily chart, you can see the euro getting down into this little oversold condition here. You can see you had a couple of doji candles. That just simply meant that the move to the downside was losing its steam. And also, what's interesting here, losing its steam as it's only been able to do after making this expansive 1.618 butterfly on a daily basis, really only been able to back off to the 0.382 level. That, folks, has a ton of meaning out there because as the euro moves higher, our markets move higher. And only being able to back off to this level, yes, it's traveling in this little very narrow banded range, this little consolidation, this little bearish consolidation channel out there, but still, even right now, traveling above the 1.382 level. It's really important to be paying attention to this chart out here. That's on the euro. If it does break through this, the question is, where would it move up to? Well, all we can do is just look at a couple different retracement levels. First one would be the 0.382 level. That takes you into the 1.28 and change. Looks like about 1.28423 out there, maybe all the way really up to 1.29. That would take you all the way back into the November 2nd level, maybe the swing point of October 31st out there. That's what I expect we will actually see from the euro, but we'll just have to pay attention because I don't need to worry about my expectations, just need to watch, in fact, see exactly what the euro does out there. If we go take a look at the Great British Pound, let's take a look at the Japanese yen. Japanese yen pulling back today. Of course, as we took a look at, even though they're not drawn here on the chart here, what we did see when we're taking a look at the Japanese yen moving up with some very long-range bars, so that's some very good price action on both the 15th and 14th out there. Of course, if we do take a look at from the high to the low, and the high is going from the March 15 time frame all the way down to the low that came in on September 13th, you will see that what the Japanese yen did was it weakened and got right up into that 0.618 level. Came in there with a wide-ranging bar. Friday was a little bit of a timeout. Today we'll see if this is going to go ahead and make a bearish engulfing candle. What that would do, that would set up some type of pullback out here. The yen, though, showing that it wants to get weaker against the U.S. dollar, just simply taking a timeout for now. Ideally, this thing would come all the way back and test the November 14th level, but one day at a time out there. With the yen right now getting a little bit stronger against the U.S. dollar, that too is energy for the markets worldwide out there. If we go take a look at bonds here, let's go take a look at James Bond. What we are showing here, I'm showing you the 30-year Treasury, and on the 30-year Treasury, you don't think there's harmonics that exist in the marketplace? Well, there certainly is. We're just taking a look at the daily harmonics. We're taking a look at the blue boxes here represent moves to the upside in bonds, and it has done 3 equal moves to the upside. Likewise, it's also done 2 equal moves, a little bit larger than the blue boxes, these 2 yellow boxes out here, and that's exactly what the bonds did, as the bonds were just simply, as I have been saying really all of last week. Folks, you've got to be careful, because bonds here losing its strength to the upside just by paying attention to the candles. When you start to take a look at these very narrow bodies out here, dojis have way more meaning on the upside than they do on the downside. So now what you've got, and they were really coming into an area of resistance. You say, Steve, what do you mean resistance? Well, just simply come back and take a look at these swing points out here, July 25th, July 26th, and most notably July 27th. You go ahead and stitch those together, and that's one heck of a bearish engulfing candle out there. So as bonds were moving up into that area, it was moving into an area that was very much strong resistance after doing a very similar move up as it did coming off of the low from August the 20th all the way to the high that was put in on September 4th out there. So you really had a very close to almost, it wasn't exact, but let me tell you folks, it was pretty close to exact out there. Now what we expect, we would expect bonds to pull back to the trend line where it broke out of. That also would be fuel in the marketplace out here. 877-927-6648. Dow futures up about 90 points right now. ES Mini up 12. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 102 points right now. S&P up 16, Composite up 33. Small caps up 9, leading the charge on the way up here. Looks a tie between the composite and the small caps. Apple up 3% this morning, gapping up $16 out there. There's some energy. There's some short covering in the marketplace. You got Google up $11 right now as well, up almost 2%. Boy, that's going to put some energy in the market. Cena Corp up 11% here this morning. What's the news behind that? That thing got kiboshed here a couple of days ago. That's up $5 and change out there. Let me see if they had some earnings report. Nothing that I see. You've got EOG Resources up $3 and change. Amazon up $4. That's up about 2%. You've got Goldman Sachs, GS, haven't mentioned their name here at the open in quite some time. Goldman Sachs up $2 and change out there. Leading things to the downside, well, let me see here. Outside of ProShares, iShares, you've got Diamond Foods. They were struggling, I believe, last week. Diamond Foods off about $1 here right now. That's another 5% to the downside. Wright Medical, WMGI is the ticker symbol. They're off 4% here this morning. Aruba Networks, ARUN, down 4%. That's up 80 cents here. Otherwise, it's nothing but Direction shares and ProShares on my list. I don't have a way to screen through those. So let's go spend time taking a look at the stocks moving to the upside here. Let's go first. We'll start off. I think Apple comes up on the screen. There we go. So I got Apple up on the screen here. Where is Apple going to bounce to? I think that maybe if I didn't cover that, Apple's first going to bounce into that 581 level. Now you've got a gap down here in Apple from November the 7th. So the top of that gap is 574.54. The bottom of the gap, which happens to be the 0.382 retracement, happens to be the low of 580.09 out there, November the 6th. So that's really the first target here for Apple. However, doing a 0.618 retracement, it's especially having been in this oversold condition, would make sense out there. One day at a time. Let's go take a look at Google out here. Let's go see what Google is doing. We know that that is strong. That also gapping up this morning as soon as I can. There we go. So let's take a look at the Google chart, see what it is doing. Google made it all the way back. Let's take a look at first its action. Google came back and retraced all the way back into this swing point from May. It's not so much a swing point, close enough to a swing point. The prior day was really the swing, which was April the 13th. April 13th had the volume out there, 648.99. The volume was 8.1 million shares. As Google was coming down in there, 1.8 and 3.4 million shares on Friday. Still not enough to really bust it down. Also got right down to the 0.618 retracement out here. That's coming off of the lows in Google from June the 14th. The low there was 556.52. The high being the October 5th level at 774.88. Google bouncing up here this morning, gapping up. If we take a look at where is Google likely to move down to, well, it's going to have a little bit of overhead resistance, more so than, quite frankly, even Apple did. Google's got some big volume downdraft to the downside on October 19th. That first level is going to be 672 even. That is from the 19th. The following, that had 11 million shares, 11 million and change. 12 million and change on October 18th. That low, 676. So that's really the range there where it will bounce to, and you will see some pretty significant resistance. Quite a supply line out there on Google. Let's go take a look at Sina Corp, see what Sina is doing. SINA is the ticker symbol, up 11% here this morning. But let's go take a look at and see exactly what it's doing. I know I saw it out here on my screen. Where did she go? Sina, S-I-N-I. I don't see it, so we'll just go ahead. There it is, right up here at the top. So we take a look at Sina. You can see that thing moving down with some big volume out there on Friday, November the 16th. Let's go ahead and let me just refresh my screen out here. Now, Sina had been moving down into a strong area, sign of strength, which was on August the 16th. That had gapped up with 14 million shares out there. And it came down and it was testing the August 15th level. That had 3.3 million shares. It tested it on Thursday with 3.2 million shares. So it's 3.2 going against 3.3 and really going against benchmarking at 14 million. Still kind of coming down there with too much volume. And then, boom, the legs fell out from underneath this chair and moved all the way down with volume into the set of swing points back here on July 23rd. So this is really quite a strong reversal candle today. So it's now support, unfortunately, on this equity now ends up being the July 17th low at about $43.12. And with having this high volume bar down here from Thursday, very risky trade at this stage, and no real high volume high out there. It was nice when it was coming back into the breakout area, into that August 15th level, but Friday's action was kind of like, But this is a very, it's one of the stronger reversal candles that you can have out there. That happens to be on Sina Corp. Let's go take a look at Amazon, see what Amazon is doing. That is up $5 and change. Of course, I just deleted Sina. Didn't mean to do that. But AMZN is the ticker symbol out here, AMZN. That is up a nice 2.5% here this morning. That also gapping up. So we got gaps all over the place. Let's go ahead and get rid of all the lines out here. So if we take a look at Amazon, so Amazon came all the way back into, so this actually is a pretty, not a bad-looking stock chart with regard to coming back into its breakout area. So let's just go pull this apart here. So as we take a look at Amazon, I need to draw a straight line. Let's take a look at the red line out here, and let's put the same line on the volume bar. So we'll put it a little bit down below just so you can actually see it if you're following along on Tiger TV. So as we take a look at Amazon, the last time that it broke out to the upside was on July 27th, 11.3 million shares. So the low of the gap up or the breakout happens to be the high of July 26th, 221.45, 7 million shares there. As Amazon came back with 3.4 million shares on November the 15th. And then on Friday, looks like a bull sash candle out here. Does volume 4.3 million shares, really rejected this area. So this area has acted as a strong support. You're gapping up again here this morning. And you also have this little high volume bar out here that was to the upside, which was on October 26th out there. So what Amazon will do, and will give you a signal, is as it gets to the high, which is 238.71 out there. If it can break through that level, what Amazon ought to do is just a normal retracement at least. We'll go from the high from September 14th down to the low of Thursday. That would get you up into the 246 and change level, most likely the swing point from October the 18th out there. Let's go take a look at some of the ETFs. Let's go take a look at the SPYs, the Qs, the Russell 2000. So let's go and take a look at the, as soon as I can find them here on my screen, let's take a look at the daily. Then we'll go down into the 10-minute chart. Right now we've got the Dow up about 130 points, but we're starting here with the Qs. So we take a look at the Qs. What the Qs were doing in the strong area of support on the Qs is going to be the island reversal. So the Qs never, even with Apple, falling apart like it did, the Qs never made it back to this island reversal formation, which was on June 1st, June 4th, and June 5th out there. Did make it back to the top, or to the bottom of the gap up that created, that form, that finished, that completed that island reversal. That was the June 6th level. The low there, 61.52. 58 million shares. Now, as it was coming back in on Thursday, it had 55 million shares. We know we had options expiration on on Friday out there, had 70 million shares. Still rejected that area. That area now has been retested. Friday was, in essence, a third test of that area. That's going to be a strong test if the market moves back down and you break through that. That is giving you quite a bit of information out there. The Qs, if we take a look at where the Q is very much the same setup as Apple, almost really a replica. The first spot that you're going to be taking a look at the Qs getting to will be the high of November 7th. That is where it last gapped down. The high of that is $65.10. I suspect that the Qs will actually close that gap, and it's really going to be the low of $65.46 from November the 6th, or the high of $66.17, where you're going to get your information released to you. You get a close inside $65.46. That says that what it will do is it should go tag the top $66.17. Of course, if you're coming in with more than 29 million shares as it makes its ascent up there, that will be releasing some information to you, such as that it actually wants higher price out there. If we go from the high to the low, you'll see that the top, in essence, of that November 7th bar is the 0.382 retracement, nothing more than a dead cat bounce, $67 and a little bit of change, really the 0.618 level. That is likely where the Qs will head to. Let's go take a look at, next up on the chart here, let's go look at the SPYs. The SPYs also doing the same thing. In essence, they came down into the August the 2nd level. That had 199 million shares. We know it came down with some volume in there. Did 191 on Wednesday, did 177 on Thursday, and then Friday, as it moved up out of there, did 239 million shares to the upside. So we can see here what we've got is a strong area of support out here. It's really this black and red line here on the SPYs. If we take a look at where the SPYs will move to next, again, it'll be similar, that November 7th high, which will be the 141.68 level. If we take a look at just simply retracements here, retracement from the from the high to the low, 142.99. That is the more likely target. That happens to really be the last swing point out there, which is November the 6th, anywhere from 142.13 to 143.52, 106 million shares. So that's the volume you're going to want to benchmark as the SPYs move back up into that area. Let's go take a look at the diamonds out here. The diamonds gapping up this morning. The diamonds making it back really just to this set of candles here. There was, let me just move the line. This, quite a bit of support out in here, just identified by the candle formations, more so on the Dow Industrial Index versus the actual diamond chart. It's why, when you're, the underlying instrument for the diamonds is going to be the Dow. And so you'd want to be paying attention to the index chart, just like if you're trading this, you want to be paying attention to what's going on inside the futures market out here. So what we will now see is the Dow will make it up into this. First, it's got this little November 7th area. It's got a bunch of volume. The low of that is 128.65, and the volume there, 18 million shares. So it's going to get a little turbulent as the Dow or the diamonds get up into 128.65 to 131.05. But I suspect what we will see is we will see the diamonds move up into November 6th as well, somewhere between 131 and 132.63 out there. Let's round this off by taking a look at the Russell. Okay, by deleting that chart. I'll come back to it. Let's go take a look at the IWM out here. The IWM also gapping. The IWM moving down into a area now of support. We've got a third and fourth test of this swing point here, this little group of swing points from July 26th. That July 26th area had 42 million shares. Now, as the small caps move down there, moved down with 55 million and 62. So got a lot of volume to the downside. What does that say? That says that eventually you're going to see a test of that area. You break these areas because they have been strong areas of support. That will be a real big heads up as to the fact that not only will the June 4th levels get tested, but that will then release information that says October 4th down below. But we'll get there when we we'll take a look at that after this market here finishes its bounce. If we take a look at the small caps, also headed to November 7th. That's going to be the level of between 79.91 and 81.37, but most likely you'll see it close the gap, get up into November 6th, somewhere in the $82.57 area, 27 million shares there. That's what you're going to be benchmarking from a volume standpoint. That is on the small caps. Let's go see here. I've got the 10-minute charts. I've got the 10-minute charts. Let's go take a look at the volume. Again, what we're going to see here in the early stages of this is a pretty large short covering rally that is out there. That's for folks that weren't paying attention to the reversal candle signals, even after the close on Friday out there. Now, just having reversal candle signals is not enough. You need confirmation. You need follow through. That's what we're certainly seeing here today out there. But there was enough out there. If you had ridden the market down, there was reasons out there to go ahead and cover your shorts out there. And those that didn't, that's what they're certainly doing here in the early morning session here. Let me refresh my screen here because I know we've got more than we've only traded here for the last 10 minutes. So there you go. So we do have some volume here at 940 on the small caps, about 3 million shares right off of the bat. Right here, we're doing even more volume right now, 3.2 million shares as we have another 2 minutes here left in the trading session. So as it makes its way up, let's just simply go ahead and get rid of this. The 10-minute chart says that the small caps want to get up into this little band, this little sideways consolidation area, which is going to be anywhere from where it's at about right now, which is the low, say 78.74, but more likely the top of that range is really going to be in the 79.60 area. That is on the small caps out there. Let's go take a peek in at the King, see what King Dollar is doing here this morning, pulling back 81.02. Volume so far, nothing substantial. I do suspect overall, when it's all said and done, we've got a holiday week. We're going to see light volume, should see light volume all week, including Friday. But it's really going to be a nice, healthy bounce. But setting up the B to a C of a very large A to B equals CD down. 877-927-6648. Dow's up 137. S&P's up 19. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow up 140 right now. Composite up 42. Apple up 21 bucks and change. Google up 14 bucks and change. Priceline up $11. The Qs having a nice day out there. Let's go up to Columbus, Georgia, to Kirk. Kirk, thanks for calling. Thanks for holding.
Hey, Steve. How you doing?
I'm doing great. Yourself today?
Oh, I'm doing awesome. Thank you for asking.
Good. You got all your Thanksgiving stuff all ready?
Yeah, well, I actually have to work on Thanksgiving.
Oh, you do?
This year.
Oh, bless your heart.
So.
Bless your heart. Well, thanks for doing that. You must be providing some pretty good service to folks out there, so that's good for you.
Yep. Well, anyway, I got a question about Facebook.
Yeah.
I shorted it Thursday, Friday, and today.
Okay.
Through December put options.
Okay.
So I'm looking, Tom said it was going to tag that 24.25.
24.25, okay.
The October 24th, that gap up.
Yeah.
And it tagged it in pre-market trading today. So I'm looking for the pullback. I think this is, what do you think?
I think I had something just crawl on my screen and I can't get it off. Oh, my God. Okay, so here we go. Okay, great. Okay, so, as we're watching, we're taking a look at this on Tiger TV. Number one, I've got this black line drawn across the screen that has acted as resistance, and you're really right up against it today. So it's going to be somewhere anywhere between 24.25. That was a number that he gave you. That was the October 24th swing point out there. Part of the problem that you have here is that you've got some pretty decent support or volume coming into that November 14th level, where there was 229 million shares. So this may only pull back into the 2250 range. So you don't have a lot of volume out here. Now, what you do have going for you, the unknown wild card out there, quite frankly, is the fact that you've got so many shares that the lockup is done. That means that employees have sent their certificates to the transfer agent. And it takes, usually that's a good, could be a couple-week process. Just depends how quick the transfer agents are at lifting the restrictions, mailing the certificate back, the certificate then getting into the broker-dealer's hands in order for those employees to do something with it. So that's really what you've got going on here right now. The problems that you do have is just simply that this thing, I think the trading range really is going to be, it can be anywhere from, I would say right now, it'll end up being the low of November 14th. If this were to pull back to 1993, not $19.93, that's the low of November 14th. That's probably all that you see, unless there's some major volume that comes out of this. So I'd be careful. I'd be careful with this trade. Yeah,
that was part of my play, all the shares that were, the lockout was expiring, and
sure.
Tom had a structure going down. He was thinking 13 was it may go down to 13. So.
Yeah, longer term, because the A to B equals CD out there. But one of the things that you want to do, and so I know you said so when you're looking at the stock charts, November 14th should have been your signal to say maybe you should just look at a different trade, just because of that volume, just because of 229 million shares out there. So that truly was a sign of strength. No matter what we might think will happen with the employees and the lockup shares, that really was a sign of strength that said you should be cautious. All right. Hey, have a great Thanksgiving. Thanks so much for whatever it is that you're doing out there and serving others. All right, my friend?
All right, Steve.
All right, take care. Remember, folks, coming up next, we've got Tom and I doing the Money Master Show, Basil Chapman from 11 to 12, Larry Pesavento 12 to 1, Daryl Martin, David White, Ken Shreve, Tom O'Brien Show from 4 to 6. And remember this, folks, you've got an amazing power within yourself, and that power, it's so strong, it'll allow you to live a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and create fantastic, loving families. Thanks for being a part of the TFNN family. We love you. We'll be right back. If you're off to start your day, be safe, and we'll see you tomorrow morning.